Visa and Google stock just both released their latest quarter's earnings reports in after hours, and they saw smash beats on their top and bottom lines, and they're both up quite a bit after hours. If we look at Visa stock, we can already see the stock is up around 2.32% after hours, and what's even more impressive is if we look at Google stock, they're up close to 5.5% after hours. So let's dig into this recent earnings report and look at the massive dividend hike that Visa stock just announced. So let's go ahead and start with Visa stock. Again, we can see up around 2.32% after hours, and if we look at this most recent earnings report, come down here, we can see Q4 non-GAAP earnings per share came in at $2.71, which was a beat by around 13 cents, and revenue of $9.62 billion, which was up around 11.7% year over year, and was a beat by around $130 million. This is obviously a solid earnings report, but what's just as exciting is the dividend hike the company just announced. Look at this. They just announced a 13.5% dividend increase, giving them a forward starting dividend yield of 0.84%. So that is a huge dividend increase. In fact, let's put this into perspective. If we go ahead and dig into the recent dividend history for Visa, let's come up here and plug in stock ticker V. Here's what we can see. If we come down here and look at the dividend history, obviously they've been rapidly increasing those dividends at a pretty astounding rate over the past decade, with a 17.35% 10-year dividend CAGR and the 5-year coming in at close to 15%. Now we can see total dividends paid out in 2023 was about $1.87. And before the recent dividend hike, the yearly dividend payment was sitting at about $2.08. But after this dividend hike, it'll be closer to around $2.36. So let's look at this on a quarterly basis. If we scroll down, we can see right here the quarterly dividend history for Visa stock over the past decade. Right here is where their most recent dividend hike is, coming in at 59 cents quarterly per share. We can see this is a huge jump up from where they just were at about 52 cents. And it's pretty phenomenal to look at this dividend history, and this is the exact reason I absolutely love dividend growth stocks. They're very predictable and consistent with their massive dividend increases, and this is one of the reasons Visa is one of my absolute favorite dividend stocks. And in fact, actually, if we look at my do-it-yourself investor toolkit, Visa is one of my largest positions for that reason alone. You can see right here, Visa makes up around 5.6% of my entire portfolio, and if we look right here, we can see I'm up close to around 28, 29, and after the jump up in after hours, close to 30% on this position. And the other thing I have to quickly point out about the dividend when it comes to Visa, yes, they've been rapidly increasing those dividends, but look at the payout ratio over time. It stayed in a very healthy range, and in fact, if we look at 2014, we can see it was sitting at 15%, and the highest it's gotten since that time is only 27.45%. So the company's rapidly increasing those dividend payouts, but the payout ratio is staying very low because free cash flow for the company is growing at such a high rate. And basically what this means is that high level of dividend growth is going to be sustainable moving forward. Now, if we start to dig into this earnings report a little bit more, keep in mind, this was their fourth quarter results. So now we have full year 2024 results for the company. Earnings per share came in at $9.73. And if we look at it non-GAAP, it came in at about $10.05 per share. So if we jump over to my stock screener sheet and come up here and plug in Visa stock, all this data will automatically load in. Now quickly, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now if we come over here, we can see earnings per share since 2013 for the company, from 2013 to 2023. And like you'd expect, it looks really good. 2023 earnings per share came in at $8.29. But here's what we just saw on that latest quarter's earnings report. We can see full year 2024 coming in at $9.73 per share. So if we put this into perspective of what we're seeing right here, this recent earnings report for the full year is going to put their earnings in 2024 about right here, right close to that $10 mark. So the growth is continuing to look really solid for this company. Now we've already seen that the company is doing a great job rewarding shareholders with a growing dividend. Right here we can see they paid out around $20.9 billion in dividends for the full year. But look at share repurchases. They bought back about $6.8 billion of share repurchases. If we jump back over to the stock screener, look at this. They've actually been buying back quite a few shares over the past decade. And keep in mind, anytime a company is buying back shares, it's going to reduce the total amount of shares outstanding, meaning all metrics on a per share basis like earnings per share, revenue per share, free cash flow per share, they're going to get boosted just because there's going to be less shares outstanding. And then of course, if we jump over to my profitability sheet and we've already plugged in Visa, what we can see is the gross profit ratio for this company is simply phenomenal. Look at this. 2023 gross profit ratio was close to 80%, and the 10-year average for this company was sitting at about 80.79%. So the gross profit ratio is staying consistently high, and 2024 won't be any different. So overall, I'm super happy with this recent quarter's earnings report from Visa, and I'm pretty happy with the full-year results. This company is doing exactly what I expect them to do, and that's the reason I'm so happy to have them as the third largest position in my portfolio. Now, when we look at Google stock, we can now see they're up over 6% in after hours. So investors are really excited with this recent earnings report. So let's go ahead and dig into it. We can see this was their Q3 report. GAAP earnings per share came in at about $2.12, which was a pretty big beat at around 27 cents, and revenue came in at $88.27 billion, up close to 15% year over year, and was a beat by around $2.05 billion. Now you can see when this article was released, shares were up only around 1.84%, but I think investors are continuing to realize there's a lot of value here after this phenomenal earnings report, again, up around 6% now. So let's dig into this just a little bit more. So like we just saw, revenues in Q3 2024 increased at about 15%, but if we start to break this down by segment, we can see Google Services revenue increased at about 13%. If we come over here, we can see this was led by strength across Google Search. Now, that's actually a pretty interesting statement to put in this earnings result. And why is that? Well, sentiment around Google and Google Search has been actually pretty negative lately, especially with all the talk of AI right now. A lot of people are beginning to speculate that artificial intelligence is going to take over the search market. And as a result of that, over the past year, we've actually seen Google start to trade at a lower price to earnings multiple. In fact, if we go back over to Seeking Alpha, look at this. We can see the forward-looking price to earnings for Google right now is sitting at about 21.99. Now, if we compare that to how they've traded historically, come down here, look at this. We can see right here, forward-looking price to earnings 21.99, but their 5-year average is sitting at about 25.72. So that's around a 14 to 15% difference, 14 to 15% lower. Let's also compare this to some of the other Mag 7 stocks. For example, maybe we want to look at a company like Microsoft. What kind of forward price to earnings multiple do they trade at? Well, we can see they're at about a 32.45 multiple. What about Apple stock? They're sitting at about 35.06. What about a company like Meta? They're sitting at about 27. So what we begin to see is Google is considerably cheaper than the other Mag 7 stocks. And again, this is because some investors fear that they're losing their moat. They fear they're losing their search engine dominance. But there's simply nothing in this earnings report that would lead us to believe that's currently the case. Now, moving on, we can see Google Cloud revenues increased by 35% to $11.4 billion. And so while that's phenomenal, look at this as well. Total operating income increased 34% in operating margin. This is a huge one, expanded by 4.5 percentage points to 32%. So not only are they growing, but they're also beginning to see some margin expansion. And when you combine those two things together, operating income growing and also seeing margin expansion, that's when you can begin to see massive earnings growth. And those are the exact types of companies that I believe tend to trade at a premium. So speaking of margins, if we jump back over to our stock screener sheet, let's go ahead and jump over to our profitability portion and come up here and plug in Google. Here's what I want to point out. Yes, 5-year gross profit ratio sitting at about 55% on average, 10-year about 57%, and in 2023 it came in at 56.63%. But if we scroll down, let's look at what it was in Q2. Using the ticker data add-on, we can easily pull this in. I want to see Google and their gross profit ratio for 2024 and Q2, and hit enter. And we can see it came in at about 58%. And what we just saw from the most recent earnings report is margins are continuing to increase. So that's a big deal for a company like Google. Now, if we jump back over to the stock screener sheet, come up here and let's plug in Google. We can see top lines growing at a high rate, bottom lines growing at a high rate. And then, of course, one of the ultimate signs of a high-quality company, consistently high levels of return on invested capital. They've been above 20% for 3 consecutive years now. And so it's interesting we've seen Google trade at a lower price to earnings multiple for the past year now. In fact, I'd continue to argue that Google looks cheap here. And this is actually something I was talking about on my newsletter just the other month. The company has a wide moat and phenomenal gross profit margins. But here's what's really interesting. If we look at Google's lowest price to earnings ratio during the 2020 crash, it was sitting at about 21.44. And at the time I put out this tweet here, their price to earnings ratio was about 23.8, not too far from 2020. And so I asked the question, do you think Google no longer warrants a high price to earnings ratio like the other Magnificent 7 stocks? And if we look now, that price to earnings ratio is even lower, around 21.99. So I think the question you have to ask yourself is Google losing its moat? Because if you think so, then maybe this is a stock you want to stay away from. But I do have to say there's nothing in this earnings report that currently indicates that's the case. If we look at the company's future earnings expectations and estimates, scroll down, we can see they're still expecting high double-digit growth moving forward for the next 5 to 6 years. So in my opinion, this doesn't at all look like a company that's losing its competitive advantages. So just like I said over on Twitter, Visa and Google really did smash earnings, and this shouldn't be a surprise. When you buy quality companies at the right valuation, you're going to really like the results that you get. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.